Negative $7.2 billion in net gamma sits across the chain today. The sheer mass of this dealer positioning ensures any directional break will be violently amplified. Welcome to the Gamma Brief. Good morning. It is Monday, July 20th, 6:45 a.m. Eastern. If you're new to the Gamma Brief, here's the background. I'm using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. This brief is built on a single data set, the SPX 0DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. As always, this is market intelligence, not financial advice. All right, let's get into it. ES futures are trading at 7,519. The prior session's call warned of a trapdoor to equilibrium, and a semiconductor rout dragged price straight through our 7,550 support level, forcing a massive regime transition. If the overnight gap holds through the cash open, then dealer gamma resistance at 7,500 is already compromised. The standard regime at the SPX close reads negative gamma. Dealers are short options and will hedge by buying into rallies and selling into declines, amplifying intraday volatility. VIX sits elevated at 18.14, confirming the structural tension. The regime read carries elevated uncertainty due to the prior session's data conditions, heavily influenced by the massive negative $7.2 billion net GEX magnitude and the overnight gap size. Critically, there is no flip within the observable chain, meaning dealers remain short options across all probable outcomes. Looking at the pivots, SPX close sits at 7,458. The expected move band spans plus or minus 87 points, projecting an upper bound of 7,544 and a lower bound of 7,371. ES futures at 7,519 have already breached the call wall at 7,500, meaning dealer gamma resistance has failed. ES futures have already cleared R1 at 7,518, making R2 at 7,578 the next active upside target. ES sits 69 above put wall, negative 19 from call wall. Gap fade reprices floor to 8. Skipping overnight, let's move on to the risk radar. On the radar today, the leading index drops at 10 a.m. Eastern. A significant beat could fuel the existing upside breakout towards 7,544, while a miss combined with energy shock headwinds could spark a rapid gap fill. The environment is consistent with defined risk directional setups aligned with the tape. Premium selling in this tape is a rowboat strategy in a storm surge market. A break below the 7,450 put wall invalidates the upside thesis and targets A break below the 7,450 put wall invalidates the upside thesis and targets the 7,371 lower expected move bound. The primary upside plan is active. Watch for resistance test at 7,578. The structural reality today is amplified negative gamma regime facing a massive geopolitical shock. Watch the 7,500 level closely on the cash close to see if dealers are forced to chase the gap. The regime wants to move. Position for the break or stay small. Level set. Wise to find. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX log are market intelligence, not financial advice. Options are high risk. Manage your size and trade your own plan.